What's up, you guys? Welcome back to the Average Joe on Money Financial channel. I'm really excited to bring you today's video. I'm revealing to you my modified fidelity dividend stock portfolio. And as you've known previously on different videos, I've let you know that I was reevaluating my portfolio because over time what had happened is it had kind of ballooned to 38 different stocks. And during COVID, I lost sight of some of them. And while I didn't experience a dividend cut, which was great, I still lost sight of them, and I don't want that to happen again in the future. Plus, I just wanted to have a really core set of holdings that I can then reinvest in on a monthly basis. So in this video, I'm going to share with you exactly what the portfolio looks like in my dividend stock portfolio spreadsheet. And just as an FYI to you guys, for those of you that are in my Patreon community, I'm going to upload a more updated dividend spreadsheet that's going to include this tab that shows the exact holdings that I'm buying and owning right now. So just be on the lookout for that on the Patreon site. And if you're not a current member of my Patreon community, you got to jump on over and join here and see what all the fun's about. I provide an updated monthly dividend stock portfolio spreadsheet with all the different dividend stocks that have been raising their dividends for at least 5 consecutive years. And I include extra data in there about their dividend payout ratio based on free cash flow, their dividend growth rates, and just which stocks I own in my own portfolio. There's a separate tab there where you can see exactly what my holdings are. If you're looking for a link to my Patreon community, check out that link in the description below. Now, let's go ahead and jump onto my computer screen. Let's take a look at what my criteria is when I pick dividend stocks, and we'll look at my actual portfolio and break that down. Alright guys, so here is the dividend stock portfolio spreadsheet. Like I mentioned, this spreadsheet includes all the different dividend stocks that have been paying dividends for at least 5 consecutive years and increasing that dividend. That's an important component. And all the stocks that I own in my portfolio are from this spreadsheet. Now, really quick, I just want to summarize for you what my criteria is, my philosophy when it comes to owning different dividend stocks. I definitely pick stocks that have been paying dividends consistently for at least 5 consecutive years. I own a few stocks that are dividend challengers, but for the most part, I like to look at contenders and champions, primarily because they have shown with a contender at least 10 years, but less than 25, and with a dividend champion at 25 years plus. These are companies that have weathered crises, and they continue to pay a dividend. Their company is stable, and they have the ability to make adjustments throughout the year to make sure that they can continue prioritizing dividends to shareholders. So I want to see a dividend payout history of at least 5+ years, if not 10 to 25 years. In the spreadsheet, you can see that here, right here at the dividend tier. You can see number of consecutive years, and you can see the dividend tier right here. Challenger is for 5 years to 9 years. Contender is 10 years to 24 years, and then champion is 25 years plus. Now, we also include in there the last fiscal year end and the payout ratio, free cash flow last fiscal year. So the standard for dividend payout ratio is to look at net income. However, I think this is flawed fundamentally because net income includes a lot of different paper expenses that don't make their way into actual cash flow. And cash flow to the business is what is going to be the ultimate determining factor for whether or not a dividend can be paid. Because free cash flow is the money available to the company to pay dividends, as well as to invest in share buybacks and things of that nature. So this column right here, this payoff ratio, measures how much their dividend is every year, how much money goes to the dividend compared to how much is available in free cash flow. So if they don't have the free cash flow, the money's got to come from debt, and we don't want it to come from debt. We want it to come from actual recurring cash coming into the business. So it takes the dividends paid divided by the free cash flow to get a number here. This percentage I want to be less than or equal to 75% generally. I'm willing to go above 75% for long-term, very stable companies. Think companies like Coca-Cola and Pepsi and Procter & Gamble. I like to keep it below 75% on the payout ratio, but if I can get a stable company that's got really stable earnings and a stable outlook, then I'm willing to go above 75%, but it's definitely the exception to the rule. And on this spreadsheet, we can see here that the numbers that are below 75% are going to be green, and then I believe I have anything between 75% and 85% are going to be green, yellow, and then anything above 85% or any situations where there is negative free cash flow. They don't even have cash available, yet they're still paying a dividend, which is a warning sign to me. That's in red as well. So you can filter that here by green. So I'll go ahead and do that because all the stocks I chose for the most part are going to be either green or maybe a yellow or potentially a red. Maybe I'll show you in just a second. And then we've got dividend growth right here. So another big priority for me is dividend growth. This portfolio that I've created has a very specific purpose, which I've talked about on my channel. I want this dividend portfolio to cash flow for me a big trip our family is taking in 3 to 4 years here, where we are going on an RV, a massive RV, think 40 to 50 feet long RV with our family of 6, and we are going to travel the country and see all that there is to see in the lower 48 states. It's going to be a great opportunity for us to grow as a family. We're really excited about it, but it's going to cost money. And in addition to working and having YouTube income, which is great, I want to have a portfolio that can cash flow as much of the expenses as possible. There's a specific divine purpose with this portfolio, which is why I own it in a taxable account. I'm gonna need the money before retirement. And one of the factors I'm looking at here, besides reinvesting my dividends, which I do with all of my dividend stocks, I also wanna have a dividend that's growing every single year. But it's gotta be growth in the dividend that's actually worth it, right? If the dividend's growing by 1% every year, good for them, but I've got historical inflation rates that are in the 2s and 3s, so I want to see a dividend growth rate that's at least going to match or slightly beat inflation, if not blow it out of the water. So I like to own dividend stocks with a dividend growth rate of 5 to 10% growth every year. Sometimes even higher than that is great, but at a minimum I want to see at least 3% on the dividend growth rate to know that it's at least keeping up with the historical inflation rate. So those are the big factors for me. I want to own dividend stocks that I'm paying dividends for at least 5 consecutive years, though I do put more emphasis on 10 years plus and 25 years plus. I also want to have dividend stocks that have a dividend payout ratio based on free cash flow, generally of less than 75%. The lower the better. Again, because that tells me 2 things. Number 1, the dividend payout is stable. It's going to continue to happen. And number 2, it's going to mean that dividend can grow in the future. So dividend payout ratio is important for me. And then dividend growth rate as well. I want to see dividend growth of at least 3% year over year, if not higher. And then lastly, I didn't even mention this yet, dividend yield, right? Dividend yield is important for sure, because that's going to lead to how much cash you're getting based on how much you're investing in the stock. So I definitely want to see a dividend yield generally of at least 3 to 4%. And I'll show you the dividend yield of all the different stocks in my portfolio. For larger companies that have a really stable dividend payout, I'm willing to accept a little lower dividend yield as kind of like a foundational stability for the portfolio. A lot of the different stocks in my portfolio will yield more than 3 to 4%, but some of them are going to yield in the 2s. And I accept that because it kind of brings balance to my portfolio. Stocks that I never really have to worry about. They're going to continue to pay dividends no matter what. So let's go ahead and take a look at the new portfolio that I have purchased. So I'm going to click down here to the Average Joe portfolio. And here's the portfolio. We've got a total of, let's click here, 1, 2, 3, 4, 5, 6, blah, 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 blah. We've got 20 different dividend stocks. Okay, that's exactly what I was shooting for. If we filter by sector first, we can see here I do have 1 business development company, more on that in a second. I've got 2 different dividend stocks in the consumer discretionary sector of the economy. Consumer staples, I've got 2. I've got 1 energy stock. I've got 1, 2, 3, 4 financial stocks. I really had to trim back there. I had like 7 or 8. That was actually a hard choice for me. I've got 3 different healthcare stocks. I've got 1 stock in the industrial sector, 1 in information technology, 1 in materials, 2 in real estate, and 2 in utilities. Furthermore, if we look at the breakdown based on dividend tier, you can see here I've got a pretty good blend here. I've got 1, 2, 3, 4, 5, 6, 7, 8 different champions. I've got 1, 2, 3, 4 different contender stocks, and I've also got 1, 2, 3, 4, 5, 6, 7 different dividend challengers. And you can see here the consecutive years. If I sort by years, you can see I've got certain stocks here at 64 consecutive years, 58, 48, 45, 45 years, and as low as 6 years, 6 years, 7 years down here. If we look here at the dividend payout ratio, you can see that most of my dividend stocks that I own have dividend payout ratios based on free cash flow of less than 50%, 60%. Although if we scroll down here, I do have a few that pop over 75%. I will explain what those are in just a second and why I chose those specific dividend stocks. If we scroll over here, we can see yield. If I sort by yield from largest to smallest, you can see my largest yielding stock 9.44% on the yield. Then I've got 8.38 here, 6, 5, 5, 4, 4, 4, 4, 4, 4, 3, 3, 3, 3, and then a few in the twos, 2.43, 2.52, 2.87%. You can see here the weighting in the fund is based primarily on the yield. I definitely wanted to bring my dividend yield up a little bit, and as a result, I added a little bit more weighting in the stocks that were yielding 4, 5, 6, 7%. Not a bunch. You can see here that if I go by weighting, if I sort by weighting, we've got 7, 6, 6, 6, 6, 6, 6, 5, 5, and you can see that those are yielding a little bit more, whereas the stocks that yield 2 or 3% are down here at the 3.5%, 4.5%, 5%. So definitely have got some balance there. You can also see that looking at the dividend growth rates here, that all of my dividend stock here are green on the dividend growth rate. I'm not sure what happened with the formatting on this one right here, but all the 1-year growth rates are in the 3, 4, 5, 6, 7, 8, 9, 10, 12, 14, 19% here. And then on the 3, 5, and 10-year growth rates, all really strong here, some of them in double digits. So really big priorities for me. All right, guys, let's take a look at the actual dividend portfolio here. Again, really excited about these different 20 stocks here. We'll start off here. You know I like AbbVie. I told you I liked AbbVie. I told you I was going to own AbbVie, and I own AbbVie. So I'm going to own AbbVie here. I've already got a pretty large holding here, and so I'm adding to it. I've got AbbVie in the healthcare sector. I've got Eris Capital, which is a business development company. A little bit different than my average holding here. It's really for cash flow purposes, just to give some balance there and add a little bit more cash flow. Business development companies tend to invest, use their money, and they lend money generally to small companies as they're growing. And so that leads to a lot of cash flow for these companies and very consistent cash flow. We've got Broadcom here. This is in the information technology sector. I really like Broadcom because their dividend growth rate is really strong here. And it's really hard to find a quality dividend stock in the information technology sector. Really excited about my holding in Broadcom. I already held it. I'm just adding to my shares there. Genuine Parts, again, one of those stable companies. 64 years of consecutive dividend growth. Some people in the past have mentioned maybe some concerns about owning Genuine Parts because of their focus on replacement parts, but only for internal combustion engines as opposed to electric cars. Yes, that might require them to flex in the future, but as a company that's so stable, I can see them making that adjustment in the future. And if they don't end up doing that, I'll sell the stock and I'll buy a different stock. But I like Genuine Parts here. I've also got Gilead Sciences, which is one I haven't talked a lot about. They're in the healthcare sector. They've got a lot of great metrics here. If we scroll over for Gilead here, we can see that they're a dividend challenger at 6 consecutive years of growth. Their dividend payout ratio, 40%. Their yield right now is 4.35%. And their dividend growth is in the 7, 9, 16% range. Great stock. Johnson & Johnson in the healthcare sector. One of those companies that's not going to yield a lot right now, but they're one that I really never have to worry about from their dividend quality. They've been raising dividends for 58 consecutive years, dividend champion, and still their dividend payout ratio only 51%. They only yield 2.52% right now, and their growth is at 6%. Every single year, which is amazing. In the financial sector, I've got Manulife Financial Corporation. I've already owned them. I'm just adding to them. They've got a really low payout ratio, which means that that's a stable dividend. Manulife offers investment and insurance solutions for Americans and Canadians. In Canada, they operate as Manulife Financial, but you might recognize the name in America as John Hancock Solutions. So great company there. They have a dividend yield right now of 5.92%, and their dividend growth rate is in the double digits. So I like them. I've also got McDonald's Corporation. McDonald's, another company that I don't need to explain what they do, obviously, but they're a dividend champion, 45 years of consecutive growth. A little bit higher on the dividend payout ratio, but still only 70% here. And you can see their yield right now a little bit lower at 2.43%, but their dividend growth is strong as well. It's a company that's one of those core, foundational holdings in the portfolio. I've also got MSC Industrial. In the industrial sector of the economy, a dividend contender. Their dividend payout ratio only 55%, their yield 3.55%, and their dividend growth rate in the 8, 17, 13, 13 range. Down here we've got PepsiCo. This is a new holding in my portfolio. Every other company so far, with the exception of Pepsi and Gilead, were already in my portfolio. I'm just kind of consolidating into these companies. But I added Pepsi. They're a dividend champion here. What's held me back in the past from holding Pepsi is their dividend payout ratio. If we look here, their dividend payout ratio is at 88%. That has caused concern for me, but I've really gotten a little lax on that with respect to strong foundational, long-term dividend paying stocks. So if it was at 88% and it was a newer dividend challenger or dividend contender or even a brand new dividend champion, I might be a little bit more concerned. But Pepsi's been paying dividends for 48 years. They have a very stable growth model. Their business has both the snack foods as well as the drink beverages, and they're very stable with their free cash flow every single year. So while 88% is higher, even in good times, bad times, people are still going to buy the products that Pepsi sells to them. So that's why I own Pepsi. It's a new holding for me. They're not going to get a massive holding in my portfolio. I think 3.5% weighting, but they've got a dividend yield right now of 2.87%, and their dividend growth is at 5, 8.3, 7.8%. There for the 1, 3, and 5 year growth rates. We scroll down here, we've got Realty Income, another new holding for me. I consolidated my real estate platform. I had 3 different real estate stocks. I felt I had a little bit overlapping real estate exposure when it came to healthcare. I like that Realty Income is a monthly dividend paying stock here. They've been paying dividends for 28 consecutive years, growing every single year, and they're a dividend champion. You'll see here their dividend payout ratio is 82%, which is generally concerning. However, when it comes to real estate investment trusts, they are required by law to pay out at least 90% of their taxable income every single year in order to keep their preferred tax preferential treatment. So 82% on the dividend payout ratio, not a concern for me because it's a real estate investment trust. Their current yield, 4.78%. They're gonna get a 6% weighting in my portfolio at the outset, and their dividend growth meets my minimum expectations just barely, 3.1, 3.3, 4.2%. So I like holding them, and that's going to be a great holding for me when I start to take out monthly distributions during our RV trip in 3 to 4 years. Next up here, Regions Financial. I love Regions Financial. They've been in my portfolio for a long time, since the beginning. They're in the financial sector of the economy. They're a dividend challenger at 8 years of growth, only 20% on the dividend payout ratio based on free cash flow. They're currently yielding 3.51%. And they have dividend growth of 7.8, 25, 23, and 31%. So I like holding Regions Financial. Star Group Unit. I told you I was going to hold this dividend stock. I mentioned Star Group in my last dividend video about 5 stocks to own here in 2021. Star Group Unit is in the utilities sector of the economy. They deal primarily with propane as well as other HVAC systems. They're a dividend challenger with 8 years of consecutive dividend growth. Their dividend payout ratio, even during COVID, has been very stable, which is one of the reasons why I like this utility stock. 14% on their dividend payout ratio. That tells me it's super stable and the ability to grow is there for sure. Dividend yield right now, 5.63%. They're getting a 6% weighting in my portfolio. And the dividend growth rate is 6, 6.5, 7, 6.1%. So very stable dividend growth as well. Next up on the list is Store Capital Corporation. This is a new holding. It's a real estate investment trust, and I really did some research on this one. I really like Store Capital. They're big on business-to-business holdings, so they own real estate that are owned by businesses. And not only do they look to collect rent from the companies, right, obviously, but they also look at the overall credit quality for the owners. In case that person's specific business at that specific location is not able to perform or is performing lower, they're able to look at the overall credit quality before they even enter to a lease. They look at the overall credit quality in other businesses they own, and they look for strong performing assets elsewhere so that in the event they have trouble with their existing location, they can still pay their rent from other assets as well. And then of course they also benefit from capital appreciation in the real estate. So I like Store Capital. I did a lot of research on them. They've been paying dividends consecutively for 6 years. They're a relatively newer real estate investment trust, but I like what I see there. Even though they have to pay out 90% of their taxable income, still their dividend payout ratio based on free cash flow, 69%. They're getting a 6% weighting in the portfolio. They currently yield 4.59% in their dividend growth rate at 5.2, 6.1, 9.8 for the 1, 3, and 5 years. Next up here is another new holding in the portfolio. First of Long Island Corporation, ticker symbol FLIC. Sorry, I've been mentioning the ticker symbols here, but you can see them on the screen. It's a dividend champion. It's a company you've probably never heard of. It's a smaller bank on the East Coast, of course, in the New York area. Dividend champion, 25 consecutive years of dividend growth here. Their dividend payout ratio, 37% here. And you can see here their weighting in the portfolio is going to be 6%, and their dividend yield right now 4.06%. And they've also got dividend growth 5.8, 8.6, 7.3, 7.2% here. Great holding here that I'm really excited to have. Then I've got UGI Corporation, which was already a holding in my portfolio. They're in the utility sector of the economy. They're a dividend champion, 33 consecutive years of growth, 60% on the dividend payout ratio based on free cash flow, which is really great for a stable utility company. We've got a dividend yield right now of 3.77%. They're going to get a 4% weighting in the portfolio at the outset. And their dividend growth right now is in the double digits, 14.4, 10.3, 8.1, 8.1 on the 1, 3, 5, and 10-year growth rates. Next up, we've got Unum Group, which is a company that deals with employers and offers benefits and insurance. You might see them on your pay stub potentially as one of those deductions you have for benefits. So Unum Group is in the financial sector. They've got 12 years of dividend growth consecutively. They're a dividend contender. 15% on their dividend payout ratio based on free cash flow. Super stable, even during COVID. A company that I'm really excited to own long term. They've got a yield right now of 4.85%, and their weighting in the portfolio is going to be 6%. We've got dividend growth here, 4.6, 9.9, 10.2, and 12.5 for the 1, 3, 5, and 10-year growth rates. Further down here, we've got Valero, a company that I already own. It's the one energy stock in my portfolio here. Valero Energy Corporation, 10 consecutive years of dividend growth, a dividend contender with only paying out 42%. Now, they did struggle a little bit during COVID, but they've bounced back. I didn't want to have a massive energy exposure because, with COVID still kind of up in the air and energy demand, but I like Valero. I like their dividend yield, and I've just had an opportunity to research them a little further. They have a different business model than a lot of different energy stocks, so I like holding Valero. Right now, their dividend yield is 6.57%. They're going to get a 5% weighting in the portfolio, and their dividend growth here at 8.9, 11.9, 18.2, and then on the 10-year growth rate, 35.9. Most recently, 8.9% though. A great holding in the portfolio. Then I've got Walgreen Boots Alliance here. Next one on the list. A dividend champion, 45 consecutive years of dividend growth. I've talked about Walgreens, how it's a stock that not a lot of people are talking about, yet it's such a strong and stable dividend payer. I couldn't help but keep it in my portfolio and grow that position. They're right now yielding 4.13%. They're getting a 6% weighting in the portfolio, and their dividend growth rate right now is at 3.1, 6.1, 5.8%, and then 11.5 on the 10-year growth rate. And then lastly, in the portfolio, I've got Westlake Chemical here. Westlake Chemical Partners. It's a master limited partnership here. They're in the materials sector of the economy. They have 7 consecutive years of dividend growth. Their dividend payout ratio, at 15%, despite COVID, almost had no measurable impact on the payout for this company. 15% on the dividend payout ratio based on free cash flow, right now yielding 8.38%. They have a 7% weighting in the portfolio, and then the dividend growth rate here at 4.7, 9.4, and 10.4%. This is the portfolio, guys. I'm really excited to follow this and track this over time here. It's much more consolidated than the 36, 37 stocks I had in my portfolio. I like every single one of these holdings, and I will keep you up to date here. I plan on, unless I see a really hot dividend stock that would replace one in my portfolio, I don't plan on moving any of these stocks out of the portfolio unless they stop meeting my metrics. When I have the ability on a monthly basis to invest more money, I'm going to invest in these different dividend stocks based on their dividend yields at the time, while also trying to keep balance amongst the different dividend stocks. I want to hear from you guys. Let me know with your 2 cents in the comments below. Which of these dividend stocks do you like? Which ones do you don't like? Which ones do you think I should have in my portfolio that I do not have? And make sure you tell me why as well. And let me know which other dividend stocks you want me to research and present to you guys on the channel here. Make sure to leave your 2 cents in the comments below. That's all I got for you guys. Have a great rest of your day, and please continue during this pandemic to stay healthy, both physically and financially. Have a good one.